Welcome to Lifestyle Solopreneur, the community for entrepreneurs who put lifestyle first. Join your host, Flavia Barris, as she interviews successful lifestyle solopreneurs and shares ideas to help you find the perfect balance between lifestyle, business, and self. Flavia is an attorney, marketing expert, and founder of several online academies. She's been featured in major media, including BBC World News, The Wall Street Journal, The New York Post, ESPN Television, and more. Join us for this episode of Lifestyle Solopreneur.
Hey, Lifestyle Solopreneurs. Today we get to meet Arn Cenedella. He is a real estate broker and investor with over 46 years of experience in the real estate industry. He founded Spark Investment Group in 2020 as he transitioned his single-family rental portfolio into multifamily properties. Arn currently manages and operates a multifamily portfolio as general partner and sponsor of over 1,000 homes and units with a total value in excess of $130 million. Welcome to the show, Arn.
Yes, Flavia. Thanks for having me. I'm looking forward to a nice chat.
Me too. And I always love to hear from people, how they got to where they are, because I think there's so many different ways that we can live our lives and we can journey in so many different paths. And you've been in real estate for 46 years, meaning you've stayed on the same path for the majority of your career. A lot of people meander all over the place, but tell us how that started for you. What sparked your interest in real estate and what got you to where you are today?
Yeah, great question. And I was a typical middle class, middle income American kid, born 1954, just recently turned 70. So I've lived a little bit of life, and parents impressed on me the value of education and do well in school and go to college and get a degree, so on and so forth. And I followed that path through Colgate University in upstate New York, and then to the University of Michigan for grad school. But at a certain point during my graduate years, it became apparent to me research and academia really wasn't what I wanted to do, not really a social environment, spending hours and hours in a lab. And I knew I wanted something different. School was great. I enjoyed it. I did well with it, but I just that it wasn't going to be a lifelong passion of mine. And I grew up in the San Francisco Bay Area, somehow made it back to New York and then to upstate New York and Michigan, wanted to return to the Bay Area. My father had started a residential brokerage business in Menlo Park, California, which is next to Palo Alto, California, basically what is now would be referred to as pretty much Silicon Valley. Short conversation, he said, hey, come on out, get your license, and I'll put you to work. And so in March 1978, I started in the real estate business, and that's what I've done my entire adult life. And happy to chat more about it.
I love that you were in Silicon Valley before it was Silicon Valley. Back then, it was just an ordinary place, not the founding place of all things tech, right?
Yeah, 100%. I can tell you, as I was growing up as a young kid, elementary school, this would have been the 1960s. Libby Canned Food Company was the biggest employer in Santa Clara Valley, and now basically Santa Clara Valley, Silicon Valley. So Libby Canned Food Company was the biggest employer. So that area was basically an agricultural community, peaches, strawberries. I can remember as a kid going down to what is now Milpitas and picking in the fields, and I forget what they pay us, 50 cents a bushel. Every basket we fill, they give us a little money. So my friends and I would go down there and pick vegetables, and had a front row seat to the transformation of the area. Exciting time. And of course, it was a great place to sell real estate. When I started in 1978, average home price may have been $200,000-300,000. And by the time I left to move to Greenville, South Carolina in 2014, average home price was probably closer to $2 million. So I was fortunate to grow up in an area that basically changed the world. Stanford, Cal, Berkeley, just a lot of smart people, and had a major impact on the world. And what will we do now without Zoom and cell phones and the web and all that? It's a much different world than when I started.
So it says here that you founded Spark Investment Group in 2020 and that you were transitioning from single family rentals into multifamily properties. There are some people listening who are not in real estate and they're like, what is the difference between a single family home and a multifamily home? What does that really mean? And the year to me stands out because 2020 was a pivotal year just in humanity, huge pandemic here that we hadn't seen, at least in the United States, for a time. And so how did that all play together? Did the pandemic at all spark this transition, or was it just happen chance that it all happened at the same time?
Yeah, that's a great question. And of course, I always remark how one's life path can kind of change in a moment, a momentary incident. You walk around the corner, you're at a coffee shop, and certainly there's plans and you try to lay out goals and that, but there's also some kind of serendipity and destiny, which is really fascinating to me. So basically, single family brokerage and investment is single family homes that I represented buyers and sellers on, and or I started to build a portfolio of rental properties that consisted of single family rentals, where the multifamily, another word for it, would be apartment buildings. So now I invest in apartment buildings. And you're exactly right. The light bulb went on in March of 2020. And if your listeners are going to rewind the tape, March 2020 was really about the time we started to understand COVID was a major impact on the planet Earth. We had inclinations of it in January, February, but it really wasn't until March that we really knew, whoa, this is a big problem. And I had a phone call from a young investor friend of mine in Greenville, South Carolina, who I met at the gym standing on a treadmill maybe 8 years before. Again, just serendipity and chance. And Mario calls me up and he goes, "Hey, Arn, what do you think is going to happen with rent collection now with COVID hitting?" And Mario was a young real estate investor. And I said to Mario, "I don't know. Call me April 5th. And basically, what that was, we had talked about the middle of March. So I had already collected rents for March on my 20, 30 properties. So what I was telling him is, well, let's wait till April and see what happens. And at the end of the phone call, he said, "Hey, Arn, I'm going to text you over a podcast that you should listen to." And it was from a guy named Neil Bawa, who was actually in tech in the Bay Area, and he was a big multifamily investor. And after listening to his podcast, kind of a light bulb went off in my head. I had an epiphany, and I decided, hey, multifamily sounds really good. I'd been doing the single family real estate for, at that point, 35 years, and multifamily made sense to me. And the other part of it was, I think as long as we're learning new stuff, we maintain some kind of youthful energy. Learning new stuff provides energy, forward motion. So after doing the single family for decades, I was ready for something different, and albeit not totally different, it's still residential real estate. It's not industrial real estate. It's not shopping centers. It's about real estate, about where people live. And so I enjoyed the opportunity to learn about a new asset class. And at that point, I made the decision to make the transition. And I've had a great time doing so, excited about the future. And it raises the whole issue about what's the definition of retirement, right? I'm financially free, but people are going to live to 90. And so the old model of working to 60 and then retiring and doing nothing, I don't quite know how that works. I'd get awfully bored. And I believe people need to be productive to be happy. There's some need in the human condition to be productive. And so the multifamily real estate is the way I can keep being productive using my brain and have some kind of purpose. But it's different than, I guess the description I would say is work is different if you have to work as opposed to wanting to work. And I think one of the things about entrepreneurship, there's some kind of level of passion there. And I would say when people are doing things they like, it's not really work, it's energizing and it fulfills them. And that's what multifamily real estate does for me now.
Now, that's amazing. And I think there's a lot of people listening who may feel a little bit trapped and are looking for their next thing. And do you think that real estate in general is an area of a career path where you can find true balance? Or are most of the people that you work with day to day who are in real estate, are they trapped as workaholics themselves? Because I think there's, like you said, when you're working a job that doesn't feel like work, then you really do feel free.
Correct. So great question. And I would say as an investor, which is what I'm primarily now, I invest on my own account. I raise capital from other investors who like being in real estate, but maybe don't have the time, energy, or desire to manage the day-to-day aspects of real estate. So I pool investor capital together. So I would say as an investor, it doesn't have to be a 40, 50, 60 hour a week. And so what I might suggest to your listeners is over their working career, they've probably worked long hours, maybe at a job that's satisfying, maybe one that's sometimes not satisfying, but hopefully they've made some financial headway and accumulated some level of capital. And I would submit that people who have some level of capital available certainly can transition into real estate and produce an income similar to what their W-2 or their professional career is providing, but it doesn't mean it has to be a 40 or 60 hour work week. Yes, I definitely think people can put capital that they've earned and saved over a decade or two, put it to work in real estate investing, and they can generate more passive income. The way we talk about it is most jobs, you trade your time for money, where with passive income generating activities, your capital is working for you 24/7, whether you're on the beach at Hawaii or you're playing golf or you're at your daughter's piano recital, that capital is working for you. And the picture I always get in my mind is every morning the capital that I have gets up, puts their suit and tie on, or grabs their tool belt and lunch bucket and goes to work for me. So it's earning income for me, but I don't have to do anything. It's a passive activity. So I think many of my investors have demanding W-2 careers and are looking for a little bit better life balance. And many of them turn to real estate investing to do that. And they do it over a period of time. It's not going to happen overnight, but it's a great way to create some time freedom, better life-work balance. So that's how I pattern my life and my investing career, create passive income streams, put the capital that you've worked hard for to work for you to generate income. And like for me now, I'm 70 and I have a certain, I don't know, what would you call it? A certain monthly expense that I need to cover to support what I consider a middle income, upper middle income lifestyle. And part of that's Social Security, and that's great, but that only really honestly contributes about a third of what I need every month. And the rest of it comes from real estate investing. And yes, I have to monitor it. I have to be in contact with my property managers and so on and so forth. But it's a far less demanding than your typical 40 to 60-hour W-2 job.
And for anyone that's listening, thinking, this sounds great, I want to be a real estate investor, what are the barriers to entry to becoming one?
Yeah, I would say the barriers to entry are minimal. I think the big thing, of course, is education. For example, for the life of me, I can't understand Bitcoin. Okay. I've tried to understand. I don't get it. I don't know. So I'm not investing in Bitcoin. I'm not going to invest in something that I don't understand. So I would say for people who want to get into real estate, educate yourself. Certainly, podcasts are a great source of education. There are numerous real estate conferences across the country, numerous publications, and start to educate yourself. You have a knowledge base and a certain level of competency to evaluate investments. And then I think the other thing I would say is start small, make one or two investments, give it a test run, see if this is something you enjoy doing. Are you good at doing it? And maybe you'll decide that's not really my jam. And that's totally okay. On the other hand, you might say, hey, this really makes sense to me. I enjoy it. I'm good at it. And then over time, you can commit more of your resources to real estate investing. Education, go slow, get a little experience, see how it works, see how you do. And if everything's positive, then you could ramp it up and then create a quantity of investing, a quantity of investments that will really produce what's needed in a modern kind of lifestyle. For Laura and I, we live a good life. We don't deny ourselves anything, but we don't go to Bali 3 times a year. We don't go to Europe 3 times a year. And for us, our annual expense is about $120,000 a year, $10,000 a month. So I'd encourage listeners to maybe think about, okay, how can I create passive income that's going to get me $10,000 or $15,000 a month? And if I can do that, then I'm basically financially free and my money's supporting my lifestyle.
There's a lot of people listening who are probably thinking you need to have millions of dollars in order to become an investor or do this kind of thing. Is that true? Is that completely inaccurate? So I think maybe letting people know, what do you really need to have before you dive in and get started as your starting point would be helpful, especially because, spoiler alert, I do know a little bit about real estate myself, as listeners know. And so I know that your answer is probably going to be an optimistic one for a lot of people.
Yes. So number one, it depends what market you're in. Certainly, if you want to start investing in real estate in San Diego, you're probably going to need more capital than if you want to start investing in Greenville, South Carolina, for example, or Kansas City, Kansas. The other part of it is, do you want to do it on your own as an individual investor where you'll go out and use $100,000 to buy a $300,000 single family rental and you own it and you're responsible for operating it? That would be active investing. Many people do it. That's what I've done for 30 years, 35 years. The other way people can do it is a more passive style investing with syndications, and that's what I do. I'm a multifamily syndicator. I raise capital from individual investors. We pool the capital together to buy a larger multifamily property. And I, as the general partner, and my team is responsible for running the operation. Individual investors can get started with investments as low as $25,000. Many operators have minimums of 50, 75, 100, but we try to make our investments accessible to, I don't know, let's call them normal people, hardworking. They're starting to save money. They have expenses. They're planning for their kids' college. They have a home they need to support, et cetera. So I would say if people could get to the point where they could invest 25 to 50,000 every year in a real estate syndication, over 10 years, they will probably have increased their net worth by two, meaning if over 10 years you invested 50,000 a year, at the end of 10 years, you'd probably have about an equity of $1 million, as well as creating a cash flow of about 70, 80,000 a year. And again, this would all be passive. The individual investor would really have no day-to-day responsibility in running the deal. If you don't have millions, to circle back to your original question, I would say start investing now, maybe 25, 50,000 a year. Do it systematically. The way I would talk about it in stocks, people understand about dollar cost averaging, right? They keep buying and investing in particular mutual funds or stocks over time. If the price goes up, they buy less shares with that same amount of money. Price goes down, they buy more shares. So with systematic investment in real estate, 25, 50,000 a year, in 10 years, you can really create a nice passive income and increase your net worth. So hopefully that provides some guidance, but I'm happy to answer more.
That's excellent. And I always, because we have had some other real estate guests on the show, I always like to say one caveat, sort of one cautionary point, which is for anyone listening that is, I want to do exactly what Arn is doing. I want to go out there and talk to friends and family and raise money and buy buildings together. It is a highly regulated field. So it has to be done a very specific way, dotting every I, crossing every T. Otherwise, you'll have government agencies after you. So it's not something that you can just bootstrap as an entrepreneur and build it yourself without some help from employers and advisors and people with more experience.
Yes, certainly. And that's the education part of it. And basically, with this real estate investing, the SEC is really the regulatory agency that you need to pay attention to. And because basically these are private placement memorandums, they're basically like non-publicly traded stock opportunities. And the SEC has regulations about how you can raise capital and what the procedures are and what disclosures need to be made. I can tell you on our syndication deals, and we typically do smaller ones, typically in the range $4, $5, $6 million, where maybe we're raising $1.5 million to about $2.5 million. We pay an SEC attorney probably about $25,000 a transaction to properly prepare the paperwork that we then present to the investors and make sure they sign. Flavia, you're exactly right. There are rules and regulations you need to follow. And if you don't follow them, you can get into trouble. And I think then the other caveat, of course, is any investment involves some degree of risk, and real estate's no exception. The only thing I would say is, in my life experience, and I would say in the life experience of most of your listeners, the price of real estate has always gone up. The cost of rent has always gone up. Now, that does not mean it goes up in a straight line continually. My experience has been 5 or 6, 7 bull market years, let's call it, maybe a year or two of correction, maybe a year or two of plateau, and then you get another run up of 6, 7 years of increasing value. And right now in the multifamily space, we probably hit the peak Q3 2022, and values have retrenched a fair amount. 15, 20% since that time. But I think the worst is about over, and I expect the bull market to return. And I guess just to bring it home, does anybody listening expect the value of their home or homes in their neighborhood or in their city to be less costly 10 years from now than they are today? I would say there's not many logical, rational arguments could be made. Labor costs are going up, material costs are going up, population's growing, and particularly if you invest in growth markets where the population increasing, you have a pretty good sense that the value of those properties will go up. And as long as you go into them in a prudent manner, in an informed manner, structuring it where capital preservation is primary, you have a pretty good chance 7 to 10 years down the road, you're going to have a profitable investment and you'll be happy with your investment. So risk in any investment, you got to do it right. If you take the long-term perspective and go about it in a prudent way, I think real estate is one of the safer ways to grow your net worth. And I would say, hey, I'm a real estate guy, and of my net worth, of my nest egg, I would say 2/3 is in real estate and probably 1/3 is in the market. So I'm not at all against the stock market or mutual funds or anything like that. I think for many people, particularly in California where tech is big and where I came from, the Bay Area, tech is really big. I would suggest to your listeners perhaps diversifying some of your nest egg, some of your net worth out of the stock market into real estate could be a prudent decision for you. I'm a big believer in diversification. If people look at the world financial order, to some degree, it's a house of cards, and it's basically based on the full faith and credit of the United States government, which basically means Uncle Sam. And to the degree you can diversify, I think you reduce risk.
This is all so educational. How does a listener learn more about your company, which is Spark Investment Group, and more about you in general and how to follow you?
Yeah, so I'm really active on social media, both Facebook and LinkedIn, either under Arn Cenedella or Spark Investment Group. And my website is Invest with Calm. You reach out there, there's a lot of educational material there, and always happy to talk and get to learn a little bit about the other folks and what they're trying to achieve.
Arn, it's been so interesting speaking with you. I'm so glad we had this chance to chat and to share your story with the Lifestyle Solopreneur audience. Again, I thank you so much for your time and sharing your wisdom with us, and I wish you the best moving forward.
Flavia, real pleasure. Great to know you. Great to run into another California person. Reminds me of home where I spent most of my life. So, yes, it was a real pleasure. Thank you so much.
Hey everyone, thank you so much for joining us, and I hope you enjoyed the show. Don't forget to subscribe to this podcast, and if you leave a review on iTunes, I promise I will read every single review. If you know someone who makes a full-time living from part-time work, and maybe this is you, please visit lifestylesolopreneur.com to nominate a guest or to nominate yourself. Because remember this, money doesn't buy happiness, but money in the hands of a happy person, there is no greater tool.
Today's episode was brought to you by the Get Shift Done program. It's a lifestyle-changing online class to help you define your business and lifestyle ambitions and to set goals in a way you've never experienced before. This class will 10x your daily productivity with methods that will blow your mind. And if you use a coupon code podcast, the class tuition is 99% off. Visit GetShiftDone.com to enroll today.